Thank you all for coming today. This is me. Now, in this short talk, we're going to discuss something that people tend to gloss over in trading. And the fact is that most traders would fail if given a profitable setup. Now, before I explain why, let me explain how I know this. So this handsome fella you see there is me. The camera makes me look fatter than I am, I'm assured. And that's me sitting at a proprietary trading firm in London, one of the many proprietary trading firms I work with. Now, the people I work with at these firms are the traders, the management, and the people in charge of the education, the trader development programs. Now, of course, I also work with retail traders like you at home. You know, people at home who quite often year after year have been trying and failing to profit from trading. So today I'm going to give you something that will help. Something that will improve your understanding of the markets within a few weeks, because you are actually going to have to do the work yourself. Something that will actually make you feel like a trader. Now, it's going to also be something that might be a little bit outside of your comfort zone. And so my expectation is that 90% of you will actually ignore this advice, but the majority that do follow it will benefit from it a great deal. Now, in the retail world of trading, the traders that get nowhere focus on this one question and nothing else, right? Now, I was recently in a prop firm where one of the traders made a 15-minute trade in Mexican peso futures. And I looked at him and I laughed and I said, what do you know about the peso? And he said it was going up, so I bought it. Now, in that trade, I think his profit for that 15-minute trade was about 20,000 US, right? And that's really, to a large extent, with some of the prop firms, that's how simple some of their trading is. So the entry is just one element of trading. And to be honest, it's not the most important element of trading. Quite often, traders, prop traders will get in and scratch a trade, get in again, scratch a trade. They're in and out, just trying to get on the right side of the market. There's nothing really scientific about the way they enter the market. But to develop as a trader, you do need to learn a method, not a complex method. But the thing is, you need to learn that method deeply to really understand it, right? So instead of having 3,000 things on your screen, you need 1 or 2,000 things on your screen that you really understand. So what you do is you learn a method. Okay, we've got the, let me just make sure my mouse is on here, my cursor visible. Right, so basically what they do in a prop firm, they will learn a method, they will trade it, they will analyze the results, and they will use those results to teach them how to actually move forward. And it's just something, and you've probably all heard of a feedback loop. So it's having a feedback loop in the trading. Now, most retail traders just focus 100% on finding some rules that define an entry and then just start clicking buy and sell. There's no process of improvement and actually no chance of improvement, right? Most retail traders, in fact, are not really taking it seriously, right? So a lot of traders that I come across, the moment you tell them to do something that's not clicking the mouse, they run away, right? So they just want to get home from work, sit at the screen. It's just a bit of excitement for them. It's boredom relief. They can go on the screen, they click buy and sell. They've got this kind of dream behind them that says, you know, if I keep doing this, I'm going to make money. But it's not really realistic. It's just playing a computer game, right? So it's a hobby, and that's fine, you know. But for those people, anything other than clicking and buy and sell does not interest them at all. They've got like zero discipline, and that's fine. But for the serious trader, let's take a look at where a more rational and a little bit more hard work approach will get you. So this is a chart based on my experience working with both retail and professional traders. So we're not going to dwell on the blown up accounts here. I mean, I do talk to people every now and again. I'll hear somebody say, you know, I've lost $40,000, but I didn't tell my wife, you know, and to be honest, I've got nothing. I really don't even want to help people like that. I want to kind of exit as quickly as possible because it's not a relationship I want to be involved with. You know, I don't want to be involved in mentioning somebody's divorce case. So the first level of success generally in trading is I'd have made money if it wasn't for those damn commissions. And that's very common, actually, even in the professional world. That's very common for traders trading multi-leg spreads. But it is a level of success to actually be breaking even or making profits before commissions. Now, the typical first profits in the professional world in a prop firm trading outright positions, you know, buy to sell higher, It's usually around $200 to $300 a day. Not big profits at all, with the imminent threat of being moved back to sim and very, very tight control of risk. Usually one strategy with a very narrow focus in terms of markets. It's kind of like you walk before you run kind of trading. Now, as a trader progresses, the ones that get through that stage, usually the first kind of, as they're like, getting big and getting more mature as traders, they get to the point where they're making 2,000 to 4,000 a day. Losing days are still quite possible, but now they've reached a level of success that puts them ahead of almost all retail traders, right? They've got a wider range of markets and setups, and the firm's giving them a bit more leeway in terms of how much size they can trade. Now, as they move on, the next level up is the guys that are making about $10,000 a day, which is, again, is quite normal in prop firms. So effectively, they've kind of earned the right to trade more size and they've got more trust from management. There's really not anything they're doing that differently between the 2 to 4K and the 10K level. It's just the management trusts them more. They've shown they're not going to go over the top in terms of risk, but they are being more aggressive at scaling into positions. And they are able to switch quickly as the market changes pace. All markets turn into kind of a runaway mode at times, and recognizing that and being able to switch into that mode when that happens is a real key skill for prop traders. So on a good day, these 10K traders, they might pull in 40,000. Now, there are levels in between, but a few traders that I've met personally have progressed to a level where they're pulling in $100,000+ a day. In some cases, becoming a significant percentage of all trade on an individual market. So I've met a guy who was 30% of all of the size on one market in Singapore, right? So these are traders that they can, obviously they can be dominating a market. They're putting a lot of size. They're nudging the market around. Very, very different skill. Now, there may be traders that are bigger than this, traders are pulling in millions a day. I've just not met them personally. Now, there's a reason you need to understand this. First of all, is to stop all of this minimum wage mentality that we have in trading. I often ask people, where would you like to be with your trading in 12 months' time? And they say, oh, I'd like to be breaking even, or I'd like to be clearing my commissions. And it's like, well, if that's the case, if that's your aspiration for 12 months' time, go and get a job in McDonald's, right? It'll pay you more, and you'll be out meeting interesting people. So, you got into this at least partly for money. So if you want to earn $1,000 a day, don't be shy about it, and keep that in your head. Because considering how much time and effort most people put into this, there should be a decent reward. Plus, as you're putting in the time, taking it seriously and putting in the effort, it's going to be a lot easier to stay on track if you have your sights on $1,000 a day than 50 cents an hour, right? But much more importantly than this, and think about this, do you think the skills to earn 200 to 300 a day are the same as those when you get up to here and you're cornering 30% of the market, or you're making $100,000 a day? Is this here just this method scaled up? And the answer to that is of course not. But who do you think is teaching traders to corner a market like that, to get to the point where the 30% of all contracts traded on a day? Is there a class for that? Is there a course on the internet? And the answer is absolutely not. There is nobody that teaches that. It's just where those guys ended up. But it is a common place to end up for the kind of elite of the traders. So these elite traders all started off in exactly the same way, small and frequent. They gradually grew. They had a feedback loop. They let the market guide them in terms of what to do next, which is what you need to do if you're not yet profitable, right? They didn't just trade. They didn't just say, oh, I'm going to have a set. I'm going to do that every day and make money for the rest of my life. They used the results to guide their future trading, which is why step one in our 2-week plan to becoming a better trader is selecting a single market to trade. Now, the first part is just to figure out the best fit market and best time to trade. So you're not going to get profitable trading replay, or rather, if you get profitable trading replay, let's say you trade say at night you replay the US mornings and you get profitable on it. There is no long-term plan. There is no way to get from there to becoming a full-time trader, because you can't give up your day job because you're profitable on replay. Okay, so the best thing to do is find a market to trade when you actually have the free time, and that's not rocket science, obviously. As most people are working, it's the rest of the time you have to trade. So in the US evenings, there are Asian markets you can focus on. For those on the West Coast, you can wake up earlier and trade the US, the New York morning. In Europe, you can trade the US close after work. And 2 hours a day is about a good target for somebody trading part-time. After the 2 weeks, the initial 2 weeks of this program, we're going to add some more review time onto that. But any more than 2 hours a day for somebody that's got a full-time job is overkill, right? There needs to be some balance. And 2 hours is a lot of time to intensely focus on something. If you've got a full-time job, you do need time to unwind afterwards too. You know, even for the retired, right? 2 hours of intense focus is still, you know, quite intense. So what you do is you find your 2 hours a day, and based on that, you'll have a range of markets to choose from. You then need to narrow that down based on 2 factors. First, which market has a sort of volatility profile you like? You know, do you like fast markets or slow markets? Fast markets, crude oil, DAX, gold. Slow markets, ultra bonds, you know, any interest rate products. And also, which is likely to give you multiple setups in the 2 hour period. Because to get good at something, you actually need to repeat it. And one trade a week isn't really going to cut it. So you need to have superhuman patience to wait a year without changing or tweaking your setup in any way to get enough statistics to evaluate a one trade a week method. So I have trouble getting people to go 5 days without changing their setup. So 1 year, it's not possible. So we need repetition because we need feedback as soon as possible to tell us if what we're doing is working out. Now let's backtrack a little, because what exactly do we mean by a setup, or what makes a good setup? Well, it's easy to think of what makes a terrible setup, and that is complexity. So I meet lots of traders who went out and they created a method which was a combination of all the really smart things they heard in webinars: multi-time frame analysis, day types, pre-market prep, market profile, volume profile, Fibonacci's, all that stuff, right? So many factors all mashed into one method that there's no way they could actually make consistent decisions in the moment, right? And that's aside from the fact that none of the factors were individually tested other than, oh, that guy sounded smart. So if you walk into a futures prop firm and all they used to trade off is a depth of market. Now, sure, they look at a few charts before the market opens, but what they use to make trading decisions is very simple, and that's the ebb and flow of the market. Now, I'm not saying you can't use things like market profile or any of the things I mentioned earlier, but you can't use too many of them, and you can't use any of them if you can't actually quantify how it helps. So that's right. So it's not enough to think one of the things you use in your trading works. You must know, because anything else is guessing. So when I talk about a setup, I'm talking about a fairly rigid set of rules and limiting how many different things you look at. Something with higher frequency, something with less factors taken into account, something where you can actually specialize, something where you're not trying to guess what the bigger picture output is. But the absolute limits for our 2 week plan are one market and one setup in that market. And of course, this is where people in the audience think, well, to hell with that guy and his opinion. But if you've got 20 different setups, or you're just trading off the cuff with no plan, and you're not making money, you need to consider scaling it back a bit, just for a couple of weeks, and see what happens. So if you aren't making money now, go back to one setup. If you can't make money on one simple setup, you will not make money 2, 3, 4, or 5 setups. You won't make money trading some kind of general opinion of where the market might end up. So remember, this is a journey. Getting profitable, that's not the end goal. This, you know, the end game is to get more and more profitable, getting better and better as you progress. So your first profitable setup is a milestone, and the sooner you get to that, the better. So the setup is basically something you've observed in the market and that you believe causes a reaction. Now, I say believe because if you're not profitable yet, you actually don't know, but you will in 2 weeks' time. So if you don't have a setup, choose something with cause and effect. So there's a few examples down here. You can go to the Jigsaw site and find about these, but fading icebergs, momentum type setups, breakouts from small ranges, volume spikes. I mean, use candlesticks if you have to. And now the third part of our 2 week plan is you're going to stop trading for 2 weeks. Now, I know nobody likes me anymore. So let's just stop here. And I want you to cast your mind back all the way back to 30 seconds ago when I said you're going to stop trading for 2 weeks. And just think about what came into your head when I said that. So a lot of you will have felt some kind of shock, some kind of revulsion, or at least some sort of negative reaction to the idea that you're not going to click buy and sell for the next 2 weeks. And some of you actually decided outright right then to ignore everything else I tell you today. So seriously, just take a minute now, go over what came into your head at the mention of not trading. So don't associate that feeling with negativity. It's not a bad thing, right? But just observe how you reacted. It's not good or bad, it's just a thing, right? So I know this because I've taken many traders through this process, and this is the one thing they had the most trouble with. They equate clicking buy and sell to trading. They equate clicking buy and sell to working, to progressing. So traders that have gone nowhere in 5 years, clicking buy and sell, still feel this way. So it's like an ingrained belief, ingrained behavior for many. And it's problematic because we need to discover if an edge works before we start trading it. So we can observe successful and failed setups neutrally without any emotional attachment. So what we see with losing traders, they're making bets on the market where they have absolutely no idea of the outcome. So what they have things that they think influence the market, but not how often or how far, or if the opposite happens often enough to reverse the setup. So it's not just that they don't know the win rate, they don't know the best approach to scaling, the stop size to use. There's so many things that they don't know that they really shouldn't even be clicking buy and sell. And if you think sim trading is going to tell you the win rate of a particular setup, think again. It will not, absolutely. Because unless you're a robot, your sim trading will produce win rates lower than any setup has available. Because only when you execute perfectly can your win rate match what the setup gives. So even when you have a great setup, it takes time and practice to perfect the execution. So here's step 3. You observe the behavior, the setup for 2 weeks. You're looking to see in real time how often it occurs, what the outcomes are, what else was going on, what the correlated markets were doing. So make notes, make the sort of notes you personally will be able to use afterwards. If you're the analytical type, make some statistics, use a spreadsheet. If you're the artistic type, draw a picture, whatever you're comfortable with. So the key here is not to judge. You have to be an impartial observer. You're gathering intel on the setup so that you can define the trade rules. Now, of course, you will be tempted to trade it. And with the people I work with, I usually help them choose something to look at. So many people have a preference already. So if somebody says, well, I really like this, it's like, okay, let's start with that. Then we'll choose some most likely candidates. Now, some people have setups they truly believe in, and let's just start there. Some have got nothing, but generally speaking, they're the exception, and it's not hard to give somebody a place to start, something to look at. So here's a good example of a trader. This comment here is a trader that found he could actually anticipate whether a setup would fail before taking it, and that he actually had 2 trades he could take from that one initial setup he was investigating. And when people do this, the feedback generally is one of not quite being able to believe what they're seeing, that this is some sort of magic trick. Like, well, I've just done this for 2 weeks. How come I couldn't see all this before? Or how could it be that simple? And the fact is, the trading got in the way before. If you remove the trading from the equation, you remove the emotion. It's still not guaranteeing you'll be profitable, but it does show you that it's possible. The comment here is typical. By observing neutrally, you can see here, trading the failure is also generating ticks. He's not only seeing that the setup has potential, he's also seen other factors that gives him other setups. And it's quite depressing that traders spend years getting nowhere and yet can see this stuff in a few weeks with just some assisted observation. Now, these are some stats from a trader that has 2 hours a day screen time available in the US morning. He's in Florida. It's based on a fairly simple setup on the Ultra Bonds. Now, this was his setup, right? I did help him choose which one to focus on, but really not that much. And I think it was his suggestion. I'm like, yeah, that sounds good. And that was my contribution. The key thing, though, this trader was 5 years in and not profitable and no idea what to do. And he was doing what a lot of people do, looking at systems, not focused on trade frequency, not focused on the time of day, trying to find lots and lots of setups to trade. And you know what? You could find a new setup every few days forever with the help of the internet. So we can see how often the setup appeared each day. We can see how often it failed. And for a 2-hour interval, this is really decent frequency. The ticks profit are all theoretical because he was observing, right? And all based on if he'd entered with market orders at the point he'd identified the setup. So there's no optimistic fills. So we saw at the end of the 2 weeks, there were 240 ticks profitable, trading one contract at a time, and it's $32 and change per tick on the Ultra Bonds. So imagine going from 5 years ago nowhere in trading to having this spreadsheet in front of you that you created based on your observations after 2 weeks. And that's what happened to this guy. So after 2 weeks, he's got actual evidence over a sample of 63 trades that there is potential edge in what he's looking at. More progress than he'd made in 6 months of sim trading. He wasn't profitable. Yeah, obviously, this is just the first step, but he can clearly see an apparent edge. He has something to work with. Now, here's another one. Different person, different technique, and again, different way of documenting the trades. So having these statistics gives people their confidence back. Suddenly, they know how to look at a market, how to assess the setup. They have a degree of confidence that the market had previously beaten out of them. Now, of course, not everybody goes to plan. And there are some traders that just love to change stuff. There's always an excuse. There's always a reason to change. Oh, but that's not a change. But I didn't change anything. I just did this. That's a change, right? They change their charts. They change their time frames. They change their trading rules. They change their approach. They change the time of day they trade. And it varies from person to person. But with the sort of plan we're discussing here, consistency really is key, right? So if you do 1 week of analysis and then change the rules, you're basically throwing away the first week's work. So these are actual communications with somebody going through this process badly. So I spent an hour with this guy discussing his 2-week plan, all agreed, no problems, just observe a few hours a day and just chill out for the rest of the day, man. You can't force information into your brain. You can't force learn. So you had a decent setup to follow. And I thought there was like a decent chance that the trade location he was using would help him discover something, even if it wasn't the edge he was investigating. Now, as you can see, he's pretty diligent in recording the results, but there is one small issue here. It's like, I can open trades periodically if it does not impact my observation reading. Now, I told him exactly what I told you a few minutes ago. Sim trading will make it not work, right? So there he is. He's primarily without trading, not live, but on sim. But why? Why? Well, I think because we feel if we're not clicking buy and sell, then we're not progressing. So this trader could not bring himself to have just 2 weeks off the buy and sell buttons. Anyway, I got a daily email from him for the first 3 days telling me how great this was going. Not only could he do the observation, he could trade it too, because he could do so with no impact. So, of course, when I saw this, I'm thinking, oh, no, man. I'm like, oh, dear. But I didn't want to reply because, like, I'm not his teacher. I'm not his dad, you know. Nobody likes to be pushed around. But so I'm like, okay, whatever. After day 3, the daily update he was sending me were kind of becoming a little bit less positive. And on day 8, I actually was blessed with not 1 but 2 emails. In the first one, he's fighting the market. Now, at this point, I'm not actually sure if he still thinks he's following the 2-week plan to some extent or not, right? I don't know, maybe it's just changed each day little by little until it's completely unrecognizable. Anyway, somehow we've gone from let's observe one setup to blowing up an account in 8 trading days, right? Also, there's a comment here about being in the daily top 10 on the Jigsaw leaderboard. We run a leaderboard for our traders that people can kind of join in, and it's a little bit of a competition we do every month. And that became one of his goals, which also seemed a little bit off scope to me. It seemed like that's not what we were trying to do. And then the frustration email comes, right? And now he's looking for another method. But the trouble is, if he finds another method, guess what he's going to do? He's still not going to execute it well initially. So he's going to be exactly in the same position he's in here, round and round and round and round in circles. And some of you might recognize this, right? And if you do recognize this, stop, right? I mean, I'm not here to tell you what to do, but like, it's frustrating seeing like so many people go through this process over and over again when it's so preventable, right? So what he's doing here, You know, he's looking at Mr. Gecko, who's a regular winner on the Jigsaw leaderboard, a trader that scales into trades, works in a prop firm, and has a lot of experience. And this guy, Mr. You know, can't sit still and not change anything for more than 3 days. He wants that. He wants it, and he wants it right now. And he's looking at other videos of other trades, and he wants what they've got too. But what he doesn't want to do, he doesn't want to work at it. He doesn't. If something doesn't work, he just wants to get rid of it and try the next thing. And of course, you know, the grass is looking much greener when he looks at those videos, you know, from where he's standing with his approach of, well, I'm not actually sure what his approach was, or even if you could say he had an approach. But at this point, I'm figuring it's intervention time, right? You know, as I mentioned earlier, if you can't make money on one market, you won't make money on two. And the trader in question had made a few common errors. In the first place, he had no idea if his setup had a positive outcome. And really, that's something you figure out before you start clicking buy and sell. So, you know, if you take any game that you play, like if you want to play poker, you know, you would learn the rules of poker before you sat down, right? You wouldn't sit down at poker with somebody who'd been playing who'd won the World Poker Championships on your first game, right? You learn the rules, you figure out what the odds are, you figure out how to play the game, right? You know, but he didn't want to do any of that. He just wanted to click buy and sell. He wanted to be a trader, but he traded anyway. And each losing trade made him feel bad. So instead of the losing trade being like a check mark on a spreadsheet saying, oh, here's the setup, here's the time, it went 2 ticks positive and 10 ticks negative, right? Instead of that, putting that on a spreadsheet, it was like, oh, I'm buying. Oh, come on, up, 2 tick, yeah, 1 tick, I'm right. Oh, it's going against me. You know, that's just a completely different scenario, right? It's an emotional thing. And each one of those losses stacks on top of each other and just becomes and just makes you frustrated, right? So after a few of those failures, his emotions got in the way, just like it does with 99% of people trying to learn how to trade by clicking buy and sell. And it's just not the way that people learn to trade in a professional environment, right? And there's simply no need to let this happen. Anyway, after the 2-week plan, you will get to the end of it. And by the time you get to the end of the 2 weeks, you'll be aware of some major discoveries you've made, but basically you need to sit down and review. Now, I work with traders that are a lot further through this process and some that are on to live after going through this. And one of the traders I was talking to a couple of weeks ago, he said, you know, I said, how was your week? And he said, oh, it's terrible. And I said, what were your stats? And he said, oh, I'm not really sure, but I had a really bad week. And he called me again later. He said, I was profitable 70% of the trades. And it just somehow got into his head in the heat of the moment, somehow got into his head that he'd had a bad week. But when he actually sat down and did the stats, he actually saw that he was a lot more successful than he thought he had been. He closed some of his winners out really early, but generally speaking, he was right. He was right in his call most of the time. So you need to sit down and do a review. So don't just wing it. And the things you need to figure out is, first of all, is the merit in what you've looked at, or did it just completely break even? Was the no reaction when you saw your setup? You might find that in some cases your setup fails so well that you can just reverse it, and I've seen that, absolutely seen that before. In other cases, the simple fact of taking a step back and just watching the market actually gave you a completely different setup. Now, you might have to start the 2 weeks again at that point, but that's a really good thing. It's a really positive thing. I've seen that many times. In a lot of cases, it'll be time to start to define entry and exit rules. So it might be a low win rate system with a great risk reward. Many of the really successful prop traders I know are profitable in about 47, 49% of their trades. So the really good prop traders, really good, really profitable, 10K plus a day, you know, they're profitable half the time. Right, so a lot of setups are about a good risk reward rate and not a really high win rate. And there's different approaches to that. You can actually scale into positions. You know, if you've got a liquid volatile market like crude, you might get in small and then actually add to the position as you move on. It might be a trade where the reaction is actually fairly small, but it's a good win rate, which means you might have to go all in, all out. You know, it might be a very short-term scalp trade and there's no time to scale in, again, all in, all out. but you will have the information at this point you need to make those decisions. And then it's on to sim. Now, when you get onto sim, you have to carry on writing down the statistics, because your sim trading will not immediately match the potential of the setup. And I was talking to a guy earlier today where I'm looking at the one column, which the column is of what the setup could bring, and it's got like 10 ticks, 7 ticks, 8 ticks, 12 ticks. I'm looking at the other column, what his sim trading did, missed the trade, 2 ticks, 3 ticks. And it's like, dude, you need to let your trades run. He says, yeah, I keep closing them early, and even though my rule says let them run. But he's fine, because he knows that the one column's actually showing him what the setup can give him if he just behaves properly. And the other column of what he's actually getting out of it, well, that's what you have to work on. So your sim trading will not immediately match the potential of any setup, which is why, as I said at the start, you give a retail trader a profitable setup and they will not make it work, right? Because you give them the setup and they'll do badly at it at first, which is normal for any new trader in the new setup. They won't do very well, and they'll presume the setup works. They don't realize that it takes time to get your execution to the point where it matches what the setup has available. So, the setup might be right 80%, but you're fumbling your way to 40% profitable in the first week. But as long as you know the setup's still 80%, you're empowered with information. So you've got to keep track of both the setup and your results as you move forward. And like I say, gut results, gut feel results don't work either. You have to review it properly. Now, there are additional steps you take after that, but today I said I'd just take you through the first 2 weeks. Nothing fancy, but what we discussed today is actually just common sense if you think about it, right? So figuring out if something works properly with a structured approach before you start trading it. Find out the expectancy, how far the market goes your way on winners, how far it goes against you on winners, how you really know a loser is a loser, then you can decide how to trade it. But do this in real time, right? Don't do this by looking back at old charts, right? Because what you need to be writing down are the statistics based on when you recognize that setup in real time. So going back and looking at old charts when you're not at the hard right edge, it's just not the same. So you're looking at when do you recognize these things in real time, right? And you decide how to trade it, and you're going to find out when something works and when it doesn't. Like one of the mentorship students here, he now realizes he's had in the past, he's had trade ideas which probably would have worked quite well, but all of a sudden they wouldn't, and he's ditched them, but he doesn't know why. He doesn't know whether it was him or the market, right? He's probably thrown out a lot of things that worked, because now he knows how to evaluate. He can see that he'd have thrown away the very things that he's actually figured works now, because he knows now how to actually understand the difference between sim performance and setup performance. And that's how you become a better trader. So it's not about finding this really complicated secret squirrel entry. The entry is simple, if a market's going up, buy it, right? It's about specializing in that entry, in that market, at that time of day, consistently reviewing the results, making sure that your trading experience becomes a learning experience. And even the traders that are making tens of thousands of dollars a day, they are still going through this process. They are still analyzing, right? And, and I know this because I work with them, right? I know that these guys sit down at the end of every day and go over the results. Now, the new guys are doing it a lot more, but the experienced guys are still doing it. Now, at Jigsaw, what we do is we actually offer the only complete solution to full trader development. So the educational content we've got is second to none for order flow education, and we offer low price training that will keep you going in trading for years. So it's not the kind of training where you watch the whole thing on the weekend and you do it on Monday. It's not like that, right? It's not all or nothing. It's about layering in one technique at a time in a process of constant improvement. So for instance, there's there's stuff here on trading slow markets, choppy markets like summer and December. That's not something you need at the moment. The stuff you've got on trade management, advanced trade management, it's not really something you need to focus on at the moment. But basically the way the education works, it's a lot of stuff, and it's just as you go on and continue with your trading, you've always got materials there to lean on to help you move forward. Then we got the tools that Renee talked about earlier. Award-winning tools voted best in class by both retail and professional traders, giving you professional level tools focusing on what professional traders we work with focus on in their trading. So if your platform's got 300 indicators and is written by a bunch of nerds that can't answer questions about how you trade, using our tools is going to be a very different experience. I mean, if you look at all those indicators, you've got to ask yourself, you know, if there was one working indicator, why would you need the other 299? You know, it's just, it's all, I better not use unpolite words, but you know, you walk into a prop shop, there's no indicators at all, you know, and there's just a few charts. They just want to know where the market is overall. And then we've got the analytics, which you can see behind you here. And world-class analytics, in fact, you know, analytics to track every trade you take in real time, giving you the chance to see what's working and what isn't, so you can do more of what works and what doesn't. And then you can be in control of this process. This learn, trade, analyze, learn, trade, analyze. And for the next 24 hours only, we've actually got a really good offer for you for people who want to get their trading moving forward. Now, all packages include all of the tools, the analytics, and access to our daily chat room. Now, for those looking to improve their existing techniques, we actually have two packages. So we have the independent package here with 10 hours of the best order flow education available. And we have the professional package with an additional 7 hours covering specialist topics, information you will come back to again and again. And if you buy one of those packages, you can always upgrade later on. But for those of you who feel you've got nothing to improve upon, and that's usually the minority, we have an institutional course that includes training from all of the training from the above packages, plus a course from our proprietary trading firm partner in London. And that is a complete short-term trading course with 19 setups and a lot of drills, so you can both learn and experience the style being taught. And just for today, the next 24 hours, there's actually a coupon code called INSPIRE, and you can get $100 off any of those packages. So if you are looking for the real deal, something that, you know, if you're ready for something that rewards you for the effort you put in, this is it. And with that, I would just like to go over the questions. Anybody got a question? Somebody's asking why reinvent the wheel. I'm not really sure what that means. Another one saying, if you can follow someone that is having success, you can succeed. And I would agree with that, but if you go into a proprietary trading firm, there is nobody you can watch trade. You don't get to sit down and watch somebody trade. What happens in a proprietary trading firm, they'll tell you what to do, they'll tell you what to look for, and they'll make you do it. And then they'll tell you the next thing to do, and they will make you do that. There's a couple of reasons you don't get to sit and watch somebody else trade. First of all, it's very, very difficult for somebody to trade and give their thought processes in such a way they can do it when the market's moving on. So if you, for instance, somebody's trading off a dome and they see an iceberg order on the dome, by the time they've said, oh, you can see that iceberg, you see that 400 contracts there, by the time the word 400 has gone out of their mouth, there's 500 contracts there. And so it's very difficult to actually trade the proprietary trading style and teach at the same time. But the other thing is it's an experiential thing. You have to experience this self. And if you're focused on what somebody else is doing, you're not really experiencing it yourself. So basically, I mean, it's a good comment. If you can follow someone that's having success, you should succeed. And it is absolutely true. But generally speaking, the way that's done is the successful people are giving you drills to do yourself and making sure that you're empowered with the information and that you're building up yourself as a trader, right? There is no just come and sit and watch me trade and then you'll know how to do it. Because for anybody who's been in a trade room for any amount of time, you know, if you've got people here that have been in a trade room, I've never met a single trader that got profitable looking at a trade room.